everyone, welcome to the market update. I'm your host K Kim. Tonight we're going to be talking about Spider, the Qs, and the banks, and we'll talk about gold and silver and the miners, and then we'll talk about some of my current holdings, which is Apple, Boston Scientific, Intel, eBay, and then we'll talk about towards the end of the video we'll talk about two of my watch lists that possibly I'm planning on engaging. Alright, let's get right into it. I hope you guys enjoyed had a good trading week this week. Today was the inauguration day for Mr. or President Trump. We didn't see a whole lot of move here. We pretty much been moving sideways last 2-3 weeks. 20 MA continues to act as support. You can see right there that 20 MA has been continuing to act as support. We actually initially gapped up. This morning came down, got back up again. We threw another doji here in decision. So basically, we're kind of bound by this falling channel resistance type, falling resistance there with the rising support. Kind of like looks like a symmetrical triangle. We are building here. So there's a pressure getting built up. There's a lot of nervousness, anxiety, thinking, is the market? Is there more room to move to the upside, or are the buyers exhausted? And is the sellers going to take advantage of this climate? But when you actually look at the NASDAQ, though, we have a different story. When we have a NASDAQ does not look anything like Spider. We actually have this bullish grinding higher move well above the 20 MA here. We're faithfully cultivating higher highs and higher lows. We're on an uptrend. We're not consolidating. We're not breaking down. We are grinding higher. So, I mean, instead of trying to just predict that this thing is going to fall over, if we just look at the tangible data at hand, the sentiment on the NASDAQ, on the Qs, is bullish. We have to give benefit of the doubt to the buyers when we look at the Qs. However, when we look at the financials, the banks, when we look at the banks, actually we have a different story. Obviously, we had a very, very strong and fast and parabolic move. And after this kind of move, it's tough to find buyers in that vicinity. So what we see is a consolidation. And it looked like, when we just actually zoom in here, it actually looks like we have broken below this support and we're actually breaking down. When we look at the banks here, and also looks like we may have some kind of a bear flag, which then potentially could result into the downside, right? And so that we have a textbook bear flag. But here's what's going to happen is, though, so we have a spider consolidating, right, in this symmetrical triangle pattern where the NASDAQ is continuing to grind higher, giving us the bullish sentiment, while the banks, looks like we have broken below or broken down and forming bear flag. This is the biggest question. Well, what the bears want to see is the banks fail here and bring down the Spider and the NASDAQ, right? But what's going to happen is if Spider breaks out of this to the upside, then what's going to happen is then the banks will probably make another move to this falling resistance, and we might see something like that, and many people will call this as a bear trap. But if bears fail, then what's going to happen is on Spider, we're probably going to retest this rising resistance if this thing continues lower than 50 MA. So what's it going to be? Are we going to see Spider breaking out to the upside, taking the banks with it? Or are we going to see the banks breaking to the downside, taking down Spider with it? I don't know. I would have to say we're 50-50. The sentiment of the market is bullish. The overall sentiment of the market is bullish because we're still holding some of these levels on Spider, even though the financials are breaking down. 50 MA is still kind of rising. It's tough to say that we're going to completely lose everything. It's very tough to say that as of today. We don't have any kind of evidence to suggest that this will come all the way down to 1995. If this thing does come down 1995, I will be buying these dips. But as of today, it's tough to say. So to me, as I look at this, we'll look at it again next week. But as I look at this, it's a 50-50 chance either it breaks out to the upside or break down to the downside. But I think going into next week, you may just fizzle around here. So embrace for volatility to continue. We may not see a huge move until the breakout move. We may even see something like, this thing looks like it's going to break out in the morning or something like that, and then towards the end of the day we see a huge shooting star type of candle where it just falls right back in, or it's going to look something like it looks like it's breaking down, and then at the end of the day you're going to see a long candle. So we're going to see something crazy happening probably next 2 to 3 weeks, so watch out for that. But again, as of today, I stay neutral on the direction of the market. But I would have to say the sentiment of the market is bullish. I know it's a little bit complicated. I'm not contradicting myself. It's just I cannot give you right direction at this one. Remember what I said? I was bullish here and the direction was up. But now that we're dealing with overbought sentiment in the overall market, and as we're consolidating, I would have to say it's 50-50. Either this thing break out to the upside or either this thing break down to the downside. And we'll look at it again next Friday, and we'll go from there. Let's look at miners and gold and silver. Miners, GDX actually looks much more bullish than gold or silver. We have to keep in mind, though, looking at a big picture, you always want to look at understand the big picture. We are bound by this falling resistance. We've been talking about this level for quite some time. As long as this thing is below that level, we are in a bear market. We're on a downtrend. Yes, we may see these kind of up move. That's what happens. It doesn't come straight down. You're going to see these kind of up moves as in a downtrend, and that's kind of what we're seeing, that up move. It's a scary move though, because this could very well come all the way down. But as of today though, GDX has cleared above the recent low, and we're holding above it. That's a good action in the minor term. 20 and 50 is the first time they are reunited after separating here. This is a downside. There was a dead cross. We have 50 and 20 seeing golden cross. That's more of a minor to intermediate term sentiment. Currently though, the 100 SMA is slowing things down. But if you're gonna have to hold 20 to 50, there's a good chance we'll get back up to 24-ish. The gap area, I think that level would act as resistance of some sort. But again, if you're a buyer here, you really want miners to do well. You want to see this thing getting well above 2580-ish, pulling back, cultivate a higher low, and continue in that. But it's tough call as of today if we're going to see something like that. Let's go to gold. Gold, again, I don't have any positions on gold and gold or silver at this point. Just to let you guys know, gold, and I won the gold market to reverse. I want gold market start to reestablish uptrend so I can get into it. But right now I don't want to go long. I don't want to go short in this vicinity. Again, like I've been saying, it's not too late to go long. Somewhere about here. Because once gold market starts to fully re-engage in this bullish establishment, it will be in a bull market for next year, 2, 3 years. And then once they get in a bull market, it'll be much easier to trade to the upside. You see. But right now, man, with this just a lot of up and downs, it's very, really difficult to. And if you're day trading it, if you're short-term trading, that's great. I'm talking about longer-term trading, or even possibly looking at this as a long-term investment, right? So looking at gold actually looks a little bit more bearish than GDX. Again, this downtrend resistance, we are in a bear market as long as it's below that downtrend resistance. We did throw the head and shoulder panel, left shoulder head, right shoulder, this thing plunge. We're getting back up here, but it's a very vulnerable area. Can you see? I mean, a lot of times you get this move, but how do you know when this thing will see another plunge? This is where even the buyers here, they're not at peace. They are holding this position they got a couple days ago, but they're like, oh my God, come on, I really need this. Get up. It's tough call here. Possibly this thing, come down to this resistance, and then will the 100 SMAs residing, and then see another tankage. Again, we are in a downtrend. Can this thing just go straight up? Yeah, anything can happen, but that will be just a 50-50 guess from here on. So, if you really want this thing to get up, you probably want to see this thing getting all the way back up here. If you're a buyer here, and then you're probably going to see this hit this downtrend resistance. And if this thing can able to do something like that, then possibly maybe something can be worked here. But what if this thing goes up, hit the resistance, and then starts to tank again? You see, so this is why, as long as we're below that falling resistance, benefit of the Dow goes to sellers in the big picture. In the micro term, we do have a little bit of pretty good momentum here, but as you can see, it's as it starts to get up here, a lot of fear. You can see it in these candles. There's a lot of fear still looming in gold there. Let's look at silver. Silver at this resistance here. This was old support becoming its new resistance there. If we can able to get above it, I think there's a good chance we can get up to about 17-ish. If you want silver to reverse, you probably want to see something like that. Silver is still bound by this falling resistance, right? Falling resistance from right here, you can see. So we're still in a bear market, obviously. If you're a buyer here, you probably want to see something like that happening and starts to cultivate higher lows and higher highs. But we'll have to look at that in, another month or so before that happening. But as of now, this is a pivotal moment here. If this thing continues higher, watch that 200 SMA, the falling 100 SMA, that's probably going to slow things down. And if it manages to continue higher, we got falling resistance, 1785, those are the levels. If thing pulls back, then maybe this, but if not, we're still in this falling, you can see the lower highs. I think if this thing falls here, it could be pretty quick to the 1489-ish level. Let's see what happens this week or next week, and then we'll revisit next Friday. Let's look at some of my current positions. I'm still currently holding my remainder positions on Apple. This was my first entry. I closed half there. I added more there, and I closed half of remainder. So I was holding half from here, full position here, and put these together. I closed half at that level. I am going to hold remainder through the earnings, which is January 31st. We have earnings coming up in about 2 weeks or so. I don't think we're going to see a huge move. We're probably going to see kind of this grindy move. Obviously, the sentiment is bullish. We are working with the overbought condition on Apple. We are. So we're probably not going to see a huge move. Plus, the earnings coming up, we're probably going to see a lot of grindy move here. I'm going to continue to hold through the earnings with the remainder positions. I am bullish on Apple throughout the remainder of this year. So any sharp pullback, or even if this thing misses, if there's a bad reaction earnings, we get a gap down or something like that, I'll be preparing to buy that if we do see a steep pullback or decline. Let's look at Boston Scientific. Boston Scientific, we got earnings coming up on February 2nd before close. This was my entry. I blogged about it. I tweet about it that this is where I'm going to go long. And then I closed half, just 17th there. I will be holding half through their earnings. We are dealing with minor term overbought condition, but I am very bullish on Boston Scientific rest of the year. So again, any sharp decline, even if this thing misses, negative reaction by traders and investors, this thing gaps down. It doesn't mean I'm going to go long right when it gaps down. I'll kind of wait and see this thing settles down, and I'll be buying that dip for another leg higher. That's the plan there. Intel, this was my entry. I'm holding full positions. Intel is actually not overbought. Looking at my indicators and things, we're not overbought yet. It's not like Boston Scientific or Apple. Actually, there's a lot of room to move. I think Intel's been really consolidating here is for the fact that we have earnings coming up on the 26th, Thursday. So we got 4 more trading days. And so I think there's a lot of just uncertainty with that. And so it just hasn't seen a lot of buyers, just only like quick short-term day traders just trading this up and down here. 20 MA. Holding as support, benefit of doubt continues to go to the buyers. I will be holding through the earnings, full positions going through next Thursday. Same with eBay, very similar sentiment on eBay. This is where I went long around 27.45-ish. I blogged about it, I tweet about it. And then we've been used to be a little bit up and down, but we are cultivating higher lows and higher highs. 20 MA acting as support. We are above 100 SMA. Benefit of the doubt goes to buyers. We're not overbought in eBay. However, we have earnings coming up on Thursday or Wednesday after close, so we're probably not going to see a huge move until after the fact. So I'm going to hold through full positions on eBay through earnings, and we'll talk about it next Friday. What happened to that position? To the energy sector and TLT, I'm watching to possible for my entry. Energy sector currently finding support. At 50 MA, you can see that 50 MA has been actually just right on, just been finding support there. And but 20 MA is acting as resistance. 20 MA was support here, and then flip back is acting as resistance. We're pretty much sandwiched between these two moving averages. If we cannot able to reclaim, I think, you know, if you're long here on XLE, if this thing can able to get above 75.27, I think there's a good chance we'll get up to 76.78 and continue higher. If that's the case, I'll let it go without me. But if this thing loses 50 MA, then we do have this huge gap here. This probably act as support. And then, you know, if this thing continues lower, then it will continue. My level to go long on XLE is either 68.78 or 67. No, actually, where was I gonna go low? Hold on a second. Yeah, I think my first entry, I'm gonna actually write it. I think my first entry, this thing dips to about 67.72 and fill this gap. I think that will be where I'll be willing to go long. If this thing continues to lower a little bit, I may add a little bit more, but probably not. I'll probably hold through it, but there's a good, these are the levels, some of these levels I'm thinking of, in that vicinity, I'm thinking about going long 60.72. Obviously, you guys know that I don't day trade, I don't even swing trade. My trades are longer term. I mean, once I go long, I'm planning to hold, you know, 3 to 6 months, 6 months a year. But I am bullish long term on an energy sector. I think we can hit all-time high, you know, above all-time high, maybe even 2 years or so. I don't know if we can hit all-time high this year though. I don't see. We may not. We may get close, but so that's my plan on XLE. Let's quickly go to Treasury bond here. Treasury bond, we're falling back. That 50 MA there. I'm thinking about going long at around 115.36. If this thing comes down to 115-ish, that's where I'll be going long here. This is a long-term, primary term uptrend there. A lot of times though, you know, you get that steep pullback. The reason why I didn't want to go long when it started to move higher is, you know, you will see these kind of, you get a plunge, and then you get the initial up move, and then it comes out, make a new low. I'm talking about psychological and technical perspective before it moves higher. Actually, if you look at this on this weekly, you have bullish divergence on the weekly oscillator. So same thing I'm looking for here. This thing comes down. I actually traded this to the upside. If you were to blog my, you know, Treasury bond, you can find it. So I'm kind of looking at something similar here. It comes down, and then something like that, and in that process, possibly we have a weekly bullish divergence, and then kind of make new low, and then kind of hit, and coinciding with this rising uptrend, horizontal support. So 115.36 will be my entry. We'll continue to watch and see what happens here. Have a great night. Have a great weekend. Again, the best way to connect with me is to go to my twotradersclub.com. I have a link below there, and put your email address right there. And you know, all my videos or articles, you get alerts on your inbox. That's the best way to keep in touch with me or connect with my articles and videos. If you want to learn more about long-term stock picks and trade alerts, feel free to check out my research plans. If you have any questions, you can always use a contact K button there to contact with me. Again, have a great weekend. I'll talk to you next Friday.